Hi, this is Jeffrey Kurt, Kurt Financial Group, and today is Friday, January 17, 2025. The good news is the stocks have rallied. The last couple of days, we've been up pretty strongly, driven by better than expected inflation numbers and also better than expected earnings that have kicked off the year-end earnings numbers. So the bad news is, though, that stocks now have been down for for the year into Wednesday's close. So the rally has dug us out of the hole for the month, and maybe that's the selling's over and we can continue to rally. But I think there's obviously a lot of obstacles. I think in the meantime, one of which is interest rates. And we've been talking about that. Now, the rates have come off again in the last couple of days. The 10 years back down to about 460. That was around 480. The 30-year yield on the Treasury bond got to slightly over 5%. Earlier this week, it's back down to about 480, I think, is where that's trading now. But those higher interest rates and the prospect that they're going to be around longer than expected and not going to go down as had been hoped is maybe causing a problem. Some data that I saw concerning the housing index and what's called a home builder's confidence index has been down for 9 months in a row. So again, the affordability of the house with inflation and then the higher interest rates, is having a dent in the potential dent in the housing market. And maybe that lasts for a while. And housing is an important industry in our economy. And I think it just points out one of the possibilities and one of the negative outcomes from higher interest rates, and that there's probably not a lot of room to lower rates, by the Fed, which is just a short-term rate anyways, but the lower rates this year, unless there's an economic slowdown. And there's a lot of indicators that look to be that the economy is going to be okay. So again, I think there's some cross currents here in terms of the interest rates staying higher. That's a negative, but we do have some economic growth and the job market pretty strong as well. And then the earnings that we're looking at now, which are going to be a lot more kicking in next week too. So we'll be back on Tuesday, as Monday's a holiday. Enjoy the weekend, and we'll talk then. Thank you. Goodbye.